spotlight.
Thanks for having me back, Dave. Really appreciate it.
Greg, thanks for being back here, and I really appreciate it. And I wanted to start off with the stock market. I mean, we have been seeing the stock market move up and down. Today it was down. Where is this going? I mean, is this stock market true? Is the stock market really reaching these all-time highs because everything is fine in the economy?
Absolutely not. I've been covering this a lot for about a week and a half now with this price action of the market. I think what people need to understand at its core is we're existing in financial fantasy land. We have for many years since status post the 2008 crash event, where world central banks, none more so than the Federal Reserve, have taken over the debt markets, artificially suppressed interest rates, going negative in certain parts of the world here in an attempt to keep the market propped up. They're deliberately creating an environment of risk, but they understand that there's nowhere else to go for investors to have yield or income. So it's creating bubbles all over the place, massive, and I underscore that enough. Capital misallocation across the spectrum. We've never seen anything like this before in history. Very recently, we've seen this market run up very rapidly, all-time high, all-time high, all-time high. We're kind of seeing it top out now. What you won't hear from the mainstream financial channels who have an agenda, I mean, they're just cheerleaders and they're reading a script, is this. This market has been gaining on very, very low volume, meaning there's no conviction to this. And we've seen this before over and over and over again. This is nothing special. Whenever a market rises like this, so rapidly on no volume, historically, you will see all of those gains be given back and then some. The mainstream wants people to believe that people are buying stocks like gangbusters. This is not true. There's no volume here, like I said. And we're getting pretty deeply into earnings season here. We're starting to see a lot of these companies beat their top line, that is their earnings per share. Meanwhile, they're missing on their bottom line. I mean, that's financial engineering. When you see that kind of thing, you can understand what's occurring. It's pretty simple. We all realize that. I would believe it's almost common knowledge to anyone that follows this market that we've been seeing companies buy back shares of their own stock for quite a long time, quote unquote, spinning off assets or selling them to buy their own stock. This artificially boosts earnings per share, but the revenue is coming in short. So this is not a good sign for this market here. And I've been covering again, about a week and a half, how this market is in a topping phase. There's almost like a perfect storm right now. And what do I mean by that? It's pretty simple. We're seeing a topping phase in this market. We're seeing the bond market kind of bottom out. We're seeing a bottoming with regard to the precious metals, which have had an incredibly stellar run since the beginning of the year. We needed a pullback. It's extremely bullish. And I think these three things are coming together at the same time and are a big tell of what may be lying right around the corner, like within days or weeks. I believe this market is ripe to fall and should fall. If you were to turn on the major financial networks, they're all talking and shaking their heads and going, these valuations, are they real? Are they sustainable? Absolutely not. Nothing is real. Nothing at all is real in this environment. There is no price discovery whatsoever behind any single asset, period, because of what the Federal Reserve is doing and all the world central banks are doing with regard to the debt market. It's that simple.
Greg, there's a couple points I just want to mention that you mentioned, and I just stuck in my head here. You mentioned something about volume. Now, when people hear volume, you're talking about the volume of the everyday person in the stock market, right?
Well, how many people are getting into this market and buying it up? Is it a broad thing? Are a lot of people rushing in here and buying? No, that is not what's happening. As a matter of fact, we're seeing less than half the regular volume. That's tremendous. So when you sit there, and this is what drives me so crazy, Dave. Honestly,
Mm.
when I watch the financial channels and you're listening to the cheerleaders reading their script, they're not going to tell people this. They're not going to tell the general population that there's no conviction behind this market. In order for a rally like this to be sustainable, to be real, you would expect to see this market run up on large volume. That's not what we're seeing here. And I can't tell you. I watch the financial channels all the time, practically all day. That's the truth. And you don't hear this. You don't hear this stuff come out of their mouths. So what does that tell me? It's a distraction. They want people to believe that this market is being bought up broadly, and that's what's causing these gains, and that is absolutely not true. All we need is a little bit of momentum to the downside, and you're going to see this market peel off several hundred points. Again, that's why I feel right now this market is getting very toppy. But let's also keep in mind we got the Fed this week. The Federal Reserve, their two-day meeting starts tomorrow. We're going to get minutes on Wednesday. I am certain they are going to try to sugarcoat everything. They're going to say whatever they need to do to try to keep this market up. Again, why? We're in an election cycle. There is an absolute direct collusion between the White House and the Federal Reserve going on, and this is not special either. I'm not a conspiracy theorist. This happens every single time there's a presidential election cycle. I ask people to do their own research. Look at presidential election cycles in the stock market, how they have worked throughout the years, and it's always the same thing. So again, nothing that is occurring here is special, except one thing. We've never, and I can't stress that enough, never seen distortions across the spectrum of asset classes like we're seeing now ever in history.
So, what do you think the Fed's next move? I know the meeting's coming up. Do you think they'll go ahead and say, okay, we're going to raise interest rates? Because the last time they came out and they said, no, right now, because of the Brexit, we're not going to raise interest rates. What's their next move?
Okay, it's pretty simple. The Federal Reserve is absolutely trapped right now, and the main reason is the yield curve. And I've been talking about this a lot on my channel lately. What we're seeing here is a phenomenon which I said would happen a long time ago. That is, let's start off with this. What the Federal Reserve is doing by keeping the federal funds rate, the overnight rate, at historic lows, basically at zero, is pinning down the short end of the curve. So they're not allowing the short end of that yield curve to come up. So the longer end, like the 10-year and 30-year, are coming down to meet it. Now, I had said this was going to happen. It is happening now. The Federal Reserve cannot and will not raise the federal funds rate because it would nudge up the short end of the curve, and that would give us a flat curve. Now, just to put a perspective on this so people can understand what that means in the grand scheme of things, we've seen this before. Again, Dave, what I'm trying to do lately, especially on my own channel, is explain to people that we've seen these turns of events or these things fall into place. The last time we saw this yield curve go flat and then invert was at the 2008 bubble top. We also saw the same thing at the at the dot-com bubble top as well, and we're seeing it now. So, and believe me, that the Federal Reserve is very aware of this. So this is the main reason. The Federal Reserve can say whatever they want. They can talk about Brexit. They can come up with any other metric they want to push this goalpost down the line because they can't raise rates. If they do, Dave, they push up the short end of the curve. We get a flat yield curve, and then what's going to end up happening is the long end is going to go lower than the short end. You're going to get an inverted curve, and down we go big time with regard to the stock market. And the Federal Reserve is well aware of that. I think the Federal Reserve has no exit plan at all, no exit strategy, no way they can unwind this without wreaking havoc on the markets. And they know that. So they're going to keep moving goalposts. They're going to come up with excuses. They're not ever going to mention the yield curve because most people have no idea what it is anyway. So they don't have to talk about it. But that's the main reason is the yield curve. They are watching it like hawks. They understand that they can never, not just this year, but never raise rates. Forget about it. Once a central bank gets so desperate that they need to engage in quantitative easing, money printing, adding digits to a screen, and whatever they need to do to keep things propped up, they're done. We've seen that play out as well. Let's look at Japan. It's in a perpetual state of this. This is why I say they can never stop. This is why quantitative easing is still going on. What people need to understand is the Federal Reserve has no magical power. So when the Federal Reserve is saying they're going to keep interest rates low, they have to actually get into the market to make it happen. They can't just say it. They have to conjure up cash out of thin air and buy bonds with it. So does that sound familiar? That's quantitative easing. It's continuing. And it will continue in perpetuity until this thing blows. And we can't be that far. I mean, world central banks have proven to be very resilient. And people like myself would have never imagined that they would have actually maintained negative interest rates, interest rates that are essentially negative in real terms here in the United States and really negative in other parts of the world. No one would have understood that they would have turned this thing upside down. The system is being flipped on its back to keep it going. But again, the analogy is very simple. They can do this, but it cannot be sustained forever. Just like a ship that is capsized, it will stay afloat for quite a while. But at one point, it will sink. And that's where we are now.
So you mentioned negative rates, and we know that Japan has negative rates, and Europe, they're in negative rates. The largest Dutch bank, just announced that depositors and business accounts, they are going negative interest rates right now. Do you think eventually what's going to happen here is the Fed is going to have to go negative interest rates?
The Federal Reserve is going to try as hard as they can to not do that, because again, this would send a pretty bad signal. I think they're going to be probably forced to do something or come up with a new scheme. In other words, we've seen this game play out before. We're in just a rinse and repeat cycle over and over again. I've shown charts about this. As a matter of fact, anyone can see it on my channel. About a week ago or so, maybe 10 days, I put up a chart from 2008, which we saw the effect of quantitative easing 1, where we saw quantitative easing 2, Operation Twist. All of these things run out of steam at one point. So the Fed is going to have to come up with something to keep this propped up. Dave, the issue is so dire right now. And what people don't understand, I mean, I'm talking about 9 out of 10. I know that your listeners get it. I'm more than certain that's true. Maybe your new ones need to be brought up to speed. But the issue is plain and simple. It could not be more clear cut. They understand that the issue that we're dealing with here with debt is not just a financial problem. You've heard me talk about this. I've been screaming from rooftops about this probably before anyone else. This is a resource issue. So world central banks have got to come up with a scheme to keep it propped up, because once we max out our credit card, we cannot continue this debt-based economic model. The entire thing implodes. It implodes on itself. The currency becomes worthless. Resources do not become available. And we will, if this scenario unfolds and I think it will, at one point, we are going to witness an event unprecedented in human history. And that is I don't know a nice way to put this, but a possible near extinction event with regard to human life, because again, resources will not be available. People will be scrambling to try to do whatever they can to sustain themselves in that environment. This debt-based economic model is maxed out. It's done as far as I'm concerned, but world central banks are going to continue to prop it up because they understand how bad this can be if we cannot continue to borrow greater and greater amounts from the future. I mean, just to put another perspective on this, let's talk about the national debt here in the United States. I'm more than certain that you're well aware of this, but it took an odd 225 years to build up the first half of our national debt. That has doubled in the last 7.5 years, just to keep the now sustained where we are. So what does that mean? In order to keep the next now sustained, we're going to have to borrow faster from the future. So what does that mean in the grand scheme of things? More debt, greater burden from the future. But again, we're done. We can't keep this going. We've been hearing about this for years. The credit card is maxed out, and we're going to be facing an event that is going to be truly epic. When, and not if, when this comes down, because world central banks have fired everything they can at the debt market to try to keep it suspended. They've taken over the debt market, utterly suppressed interest rates, and they've created bubbles to magnitude that are absolutely out of control. The largest of which is the debt bubble, which has pulled the stock market up with it and caused, again, distortions of asset prices across the spectrum.
So what you're saying right now is that every empire has a lifespan, and we're at the end of this lifespan right now.
You know, that is an amazing analogy, and I think you're 100% correct. Again, people go read a history book. Every great empire rises and then falls. Unfortunately, that's where we are. But Dave, the issue here is this is global. This isn't one empire. This is a global empire. So what does that mean? I think you know what I'm about to say. We are leading toward war. War for resources, a scrambling towards resources. And that, again, plays right into what I was saying about this possible human extinction event, which can happen. If people were to rationalize and think through what I am saying, they'll understand that it is absolutely feasible and more than likely will happen. And I can't imagine a way out, because the debt-based economic model is at its end cycle, in my opinion. And we can see this by the action of world central banks having to actually go negative to flip the system upside down. Dave, the system's not meant to work like this. I know you're aware of that. Right. But people don't understand that the system is not meant to function in a negative rate environment. When we have a negative rate environment, when a world central bank goes negative, they're actually dictating, they're saying that the currency is worthless. That's what they're saying. And once this becomes realized, well then, again, that plays out into every single thing that we're in. Bubbles everywhere. And it's all going to come down at the same time. From a financial standpoint, people need to do the two things that I've been saying for years. And that is, number one, bet against this debt. And how you bet against the debt, because it's not sustainable, is by holding a hard asset, period. The monetary metals are going to make a moonshot when this whole thing comes down, because it's real money. We are going to see other assets, again, correct to fair value. That's what people need to understand, is this environment of distortions is not really a collapse. It's a correction to fair value. Things are so twisted right now because of the action of world central banks, who have created this environment of risk, again, capital misallocation across the spectrum, that when this does correct to a fair value, it's going to seem like the mother of all collapses, but it's not. It's just a correction to fair value.
Greg, you mentioned war. Is war going to stop the collapse? Or
no. It's all going to come. Well, again, it's going to be. There's no way to stop this, Dave. What we're in here is an environment of extremes. An environment of extremes, meaning these distortions have to correct. And I'm not just saying this as a maybe. Again, people look back on history. This is nothing special. We are existing in a multiple bubble environment. And the one thing that we know for a fact, an absolute fact, is every single financial and economic bubble in history, without exception, bursts. They all burst despite any effort to keep them sustained. So that is going to happen here as well. And again, that is going to create a resource problem. This is why countries are gearing up right now. Why do people believe that China, and do your own research, people, and Japan are dumping U.S. debt? They're just dumping it. You don't hear about this on the mainstream, but why would they be doing that? Because they see where this is all going. Look, the main issue is debt, and I can't stress that enough. The debt is no good. It's backed by nothing. If we understand that, And we understand that this bubble cannot be sustained by any means. We need to protect ourselves. It's that simple. We need to bet against the system and become our own central bank. Again, those are my two themes literally since day one when I sat down in front of a computer. I don't even remember what year it was when I started doing this. It's been quite a while, but that's the truth.
Greg, for my last question, a lot of people ask me, how long is this going to last? How long should I prepare for? In your opinion, how long do you think this entire collapse scenario is going to last for?
I would say this. We need to keep, if we're looking for signs as to when this is really going to start going here, look around the world. There's increasing terrorism. There's strife all around the world. We have social uprising here in our country. This is all part of it. It's happening now. But I think what you're trying to ask me is how long will it stay in that bad phase? I really can't.
When it starts to collapse,
yeah.
Is it going to be like 3 months and everything will be okay?
No.
Or will it be sick? You know what I'm saying? That's what everyone is trying to ask me here.
It's going to be rapid. It has to be. And why do I say that? Because it's happened. Again, Dave, we've seen this before. This is just a repeat. When bubbles are created, they do not burst slowly. They burst rapidly because people run to the door, either trying to sell assets or buy up assets very, very quickly. So when this thing really starts going here, and this is why people need to be ready from right now. They should have been getting ready for a very, very long time. World central banks have proven to be quite resourceful, but it cannot continue. So what people need to just understand is, I know there's a lot of people out there saying it's going to be slow. There's no way. Show me, I challenge anyone to show me a scenario where a bubble has burst slowly. And I'll help you out. There's never been one. Every single bubble burst so rapidly that most people get completely caught off guard and absolutely wiped out financially. And that is exactly what's going to happen now, unless they're on the right side of that bubble. Because there are inverse bubbles, Dave. The inverse bubbles exist in the monetary metals. They are so grossly undervalued based on global debt that it's hard to actually get your head around. And I can say this for people, at a minimum, gold is going to equal the Dow at one point. If we get Dow 6,000 at one point, gold is going to be 6,000. Just to put a perspective on that. And you can only imagine what that means for silver, which is my favorite of all metals and monetary metals.
And I just wanted to extend that out. So the bubble will pop, and then once it pops and it comes down very quickly, the economy, how long do people have to ride it out for?
That's a great question. I don't know the answer to that, because what do we know is going to happen at that point? Rule of law will probably not exist. The governments are going to have to institute some type of control, because again, people are not going to be able to get resources in a worst case scenario. Okay, let me just outline that for people. You have to look at things that way. This is Sun Tzu, The Art of War. You always have to be prepared for a worst case scenario. Even in a not worst case scenario, people are going to suffer at such a level. Again, why? Their investments, their 401ks, stuff that they've been depending on is going to be legally stolen. A wealth transfer effect is going to occur. Unlike anything we've seen before, although we have seen things before. This is what world central banks do, Dave, and you are well aware of this. Mm-hmm. They are serial bubble blowers. They blow them and they burst them on purpose. And the reason why they do this is every time these bubbles are burst, wealth is legally taken. It's transferred from one person's reality into another person's reality. As a matter of fact, I did a video today where I talked about how I'm going to do this. I said, okay, I think this market's topping out. I'm waiting for a couple of parameters to come in place. I think the Dow Jones Industrial Average more than likely has already topped out. I'm waiting for the S&P to show me some other parameters that need to fall in place. And then I am going to short this big time. So as people are losing money, it seems like it's transferred to other people. Look, I'm playing the same game that the investment banks are playing. And this is what they're going to do. And what the end result this year is people are going to look toward, as you well know, Dave, towards the government for help. The government who has been a direct participant in the action that we're seeing now. The people are going to look for the government for help. What a joke, right?
Yeah.
But unfortunately, that's how it's been played out.
Greg, I really appreciate you coming on the X22 Report Spotlight. Once again, how can people see your work?
Oh, just go right to my website, traderschoice.net. Lots of free stuff there. I urge people to download my absolutely free 197-page ebook, Ultimate Guide to Money in the Markets. It's a little dated, but the information in there is very relevant. It's absolutely free. I don't ask for a thing. So please, people, take advantage of that. Go to my website, download it, and it'll be worth your while.
Greg, once again, thank you for being on the Spotlight.
Thanks for having me.